Good morning, ladies and gentlemen. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, September 15th. It is 6:33 as I'm starting the video, and as always, please run your player at 1.25x. Let's take a quick look at futures. Equities, more or less flat, but at least they're flat to green. All the equity indexes are up about 0.25%, so toggling near the flat line, but at least green this morning. Oil up 1.5%. If you've been paying attention to commodities, oil is back through $70, coming up into some resistance area. I think it's going higher, but there is some overhead resistance there. Nat gas up 4%. That is really the talk of the town. I have not been attuned to it, unfortunately, but now we're taking out some major resistance levels, and I wouldn't be surprised if there's a big squeeze higher. Also in Europe, I might add that they're paying like world record prices for electricity right now, and they're heading into winter with record low inventories. So if you remember a few years ago in France, the Yellow Jacket protest, a lot of that was about energy prices, believe it or not. And I wouldn't be surprised if nat gas keeps going and Europe is facing more super high energy prices, even higher than they are now into the winter months, that you wouldn't see some people out in the streets on that. And I think that's part of it is, Europe is a lot farther along in the green transformation in the energy complex than we are. Lot of wind and solar over there as a percentage of the mix. And you need baseload power, and when you've been investing in windmills and solar, you just don't have that. And then when you have these spikes in hydrocarbons, you're just at the mercy of the market. So I would watch that political dynamic over there closely. Okay, gold hasn't been doing anything. It's been toggling between 1780 and 1835. I think 1835 is your breakout level on gold. I would at least set an alarm there, even if you're the least bit interested, just as a reminder, especially if you're not actively trading it, that might be a breakout worth making note of. And then the Nikkei was up 0.6%. On the macro front today, we've got the Empire Manufacturing Index. We've got the Atlanta Fed inflation number, which I think will be important, coming on the back of yesterday's CPI number. We've got industrial production, and we've got oil inventories. And I think on the oil, part of it is the production cutback due to Ida, and that still has not been resolved yet. So I think there's a bid under oil now for sure. And really, the title of today's video is "Has Risk Sentiment Hit the Tilt Button?" And if you'll recall, and I know we've got a lot of new people here, so welcome. I'm glad you're spending some time with me. But earlier last week into this week, we were talking about there's the macro risks we're building in addition to the charts, but we've got a big OPEX quad witching on Friday, and unlike last cycles where the FOMC was before option expiration, this time we've got it after expiration. And so we've got risk next week just as the options roll off. And I think I think we've seen what we were thinking about seeing, that the market would hit a pause, that there would be a bid in the VIX. Why? Because not only because of OPEX, but also hedging out risk for next week. So I think there are times, as a trader, as an investor, you've got to have situational awareness. Is this a time to have your gas pedal mashed to the floorboard, going full bore ahead? Is it a time to shift into neutral, or is it a time to reverse in the sense that you're going to go bearish? I think we are right in the middle. I'm not, if you got bearish at the top, if you called that top, that's great. You've made some money over the last week. But for longer term swing traders, I think now is hit neutral. We're still above the 50 EMA. That's more or less the line of demarcation for me. I'll show it to you in the charts, of course. But remember our basic technical analysis tenets. Above the 50, generally bullish. Price above the 8 and 20 day moving average. Pedal to the floorboard, bullish all the way, and then below the 50, you've got to shift into a bearish mode. That doesn't mean you necessarily have to, short everything in sight, but there's the idea that nothing good happens under the 50, and I think that's more or less true, especially when you're coming off the top. Then you've got to look down at lower levels. You've got to find out where the 200 is. And then under the 200, you're definitely in bear mode once you lose the 200. And those apply not only to the indexes, but any one individual name. You can use those rules, and that's what makes them so powerful. So yesterday, we had the CPI, we had 0.3, and then 0.1 core below expectations. So check mark for the J. Powell transitory camp. Inflation backed off in August, and we saw rates knocked down under 1.3%. And we said you may see some fireworks. Now, I don't think we saw fireworks yesterday, but we did see, banks, terrible day. We saw small caps leading to the downside. That's what you'd expect to see on a rate move down, knocking some of the air out of the cyclical reopening type trade. Now, what we didn't see was what we expected to see, and that is a big lift to technology, because remember, that's the other scenario. Falling rates is a tailwind for technology, bubble stocks, ARC stocks, high valuation type names. We didn't really see a lot of that yesterday. The Qs were down. A lot of those other names were down. So we're just gonna have to watch this and see if we fall further. And if we do, you're probably going to see IWM go a lot lower. Here's the resulting move on TLT. Remember, TLT trades opposite. Right here, we had been watching this triangle form. We broke out above 150. If you were on top of it or interested in bonds, we had talked about alarming 150 on the upside. Now what you've got to do is alarm 152, because we take out 152, something is really changing, because that would more or less make this look like the first leg, make this look like consolidation, and then make this look like a big breakout. And that would open the door for a run up towards 154.50, 155. So that would be a falling rate environment, and that wouldn't be good for, banks, cyclicals, reopening, all that kind of stuff. So if you're interested at all in trading TLT, 152 is your next big pivot level. And you can see back here where we basically got to that level twice and it was turned away back down again. So really important level, especially if that breaks out. We've been focused on the VIX. Slight rising RSI, but definitely a rising PPO momentum profile. We were down here at the bottom under 16, where in the past it has not stayed for long. We got the move higher, spent a couple days above 21, or above 20, up near 21, and then yesterday they pulled it back a little bit into the 19 spot 50 area. So again, I think you just got to look at 20 as a toggle point, and if we bounce, if we start moving higher from here, you're going to see that VIX fall. And then I think the next level to the downside, if we were to push below 18, that would certainly be positive for risk sentiment. But I think what you're going to see here in the next couple days, if it doesn't go higher, I think we will stay in this range until the FOMC clears next week. I can't really see, people going pedal to the metal here before OPEX and before the FOMC. We may dribble higher, we may dribble lower or go a lot lower, but I don't see us rocketing higher from here with those two big macro catalysts in front of us. I think that stuff's got to clear first, and then we'll take it from there. Equal weighted SPY right here at the 50. We had been watching this line right here at 153.50. I think that's as good a pivot as any. You want to see a move off of the 50 higher. You want to see a bounce today. You want to see the 50 hold, because if it doesn't, you're going to be looking at 152. So, and this one's important to look at because, Apple, Apple, Amazon, Facebook, all those guys don't have any advantage or overweight as it does on the cap weighted SPY. So this gives you a much better representation of what's happening under the surface. So let's move on to SPY daily. We are right back down to the bottom of the rising daily channel. We were up here near the top. We rolled over. We lost the 8-day. We lost the midpoint. We lost this 447.50 pivot point. And then we've made two reach downs to the bottom of the channel as I've got it drawn. And you can see that the 50 comes in here right at 441.35. So today and in the days ahead, we've got to be hyper focused on price right here, because we're at a key inflection point. We've got the bottom of the rising channel right here. So if we got a bounce today, that would technically be great and be what you'd expect. Why? Because on the other excursions down to the bottom of the channel, we've got bounces at that point. So whether that bounce is small, just a green day would be helpful at this point, because we've had 6 or 7 consecutive red days. So, anything green today, we will certainly take. But on the downside, a break below 442.50, a close below, would not be great. But the real line is the 50 down here at 441.35. You break that, close below the 50, then you've got to start looking down towards 436 is the next level to the downside. And notice the indicators are still heading lower. So that's not particularly supportive. As we drill down to smaller time frames, we'll get more resolution on these levels. The gold EMA here is the same as the 50 on the daily. So coming in here at 441.35, I've got a little zone of support here. We've got a large volume over price bar that comes right in at 442.50. So this is the area right here that needs to hold. And then what would make me feel a lot more comfortable is, of course, a recapture of 447 from below, and that would get us back on the right track. Now, I want to offer up one scenario for you. If we go back, let's go back to the daily for a second. Notice in these other episodes that on these excursions to the 50, they were sharp affairs, if you remember. I mean, 3 days down to the bottom, 2 days down to the bottom, 2 days down to the bottom. Here it's been much more of a grind lower. So I think we got to be prepared for a scary bar. What do I mean by that? Something that goes down, a big red bar that goes down, slices through the 50, but only stays down there for, an hour, and then they buy it back up and give you that big hammer look, kind of like this day here, where this day they opened it low and then bought it back up. But if we were to, have a big sell event, like a panic bar, when that happens, everybody and their brother are going to be hitting the bids to get out of their positions because they're going to be scared. But then what they like to do is then bring it back up, and then of course you're out. So it's more or less like a stop raid. Be psychologically prepared for that, and that may end up being a opportunity. If of course, if it's got to stop at some point. You can't just say, oh, they're going to buy it back up. You've got to be watching really carefully. But if you're trading the daily time frame, you're just going to go off the close anyways, right? So don't really need to worry about it. SPY 30-minute, pretty tight downtrend. I think today, for active traders, if we lose yesterday's low at 443.50, then you got to be short. And you've got downside targets below. Now, there was a gap from back here that we filled yesterday. So, as far as I can tell, at least in the near term, we don't have any open gaps that would act as targets. So, I would use 443.50 as your pivot this morning. Now, here's the daily on QQQ. We've still got the bearish divergences in place that have been there for weeks and weeks and weeks. We've got this rising wedge that's squeezing at the top. The Qs are in a much stronger technical posture than SPY. Why? Because we're still sitting on the 20. You can see the Navy EMA is the 20. So, and we've got support here on this wedge, but you see a big bar break below, then this has the potential to move to the downside pretty quickly. And you can see the 50 EMA here at 367.70, I would be looking at this like 368 to 365. These two levels here with this large volume over price bar, I would be looking at that as a zone of support right here with the 50 right in between. You know, you lose 365. I mean, you got to start looking way down, because notice how on the volume profile, things fall away pretty quickly, and you won't have a ton of intermediate support levels once you break 365. So at that point, you've got to put on your bear suit, I believe, and kind of abandon hope for some kind of big bounce off the 50, because then you'd be below the 50. You'd be below this key support level with a lot of air down below, and we'd be looking at a much deeper pullback. 2 hour, simple. Use 374.50 as your pivot point this morning. You know, if we lose yesterday's low, then we're going lower. It's just that simple. The next level down, I have 372 as a level, and then back towards this prior trading range at 369, give or take, with a little open gap there left to fill. But if we can reclaim this 376.50 area, we can cycle back up towards the top, and then this 378.50, 379 area would be an important level to capture for the Qs. And here we just got a zoom in on the 30-minute, and you can see this 374.50 was a nice reference level. We've got quite a number of candles reaching down to that level, and it has held so far. So I think if you're an active trader, I think you can be long above 374.50. But then if it, if that breaks, and especially if this level here breaks at 372.75-ish, you've got a sizable void here in the chart, and I think it would move fast at that point. Moving on to IWM, it has rolled over. What I did was put on the fibs, and we are right here at a 50% pullback off of the initial move higher. If we lose 220, and come down here and rates fall further, I think there's a pretty good chance actually that this comes down and tests the bottom of the box again, except now we've got the 200 coming in here. That would be within the realm of possibilities. What do we got to see on the upside? Well, we've got to see a recapture of 222 and then a recapture of 224. But you can see here we had a reach down below 220 yesterday, and they bought it back. And the day before had a reach down to 220, and then they bought it. So this 220 is a pretty clear line for you to shoot against, either on the long side or the short side. And one thing I forgot to mention, and you probably have already noticed on your own, we've had 3 consecutive days of gap higher opens, and either an immediate sell-off or a flash higher and then sell off. We have not had the last 3 days any instance where the open has held. They have sold it every time. So keep that market narrative in your mind, especially if they run it up this morning, into the cash open at 9:30, that those gaps that have been left behind in the pre-market have been filled in every instance over the last 3 days. That doesn't mean it's going to happen today. I'm just saying that that's been the modus operandi of the last few sessions. So getting back to IWM, here just more granular. You can see that 220 has been important the last few days. Over here, found support. Back here in the charts, it was resistance. So this 220 is pretty clear. And then you've got this 222, 223, and 224 on the upside. If we get a bounce today, those would be the levels that I'd be looking at for recapture. As I normally do, as we get into the Fat Man names, I want to welcome any new visitors to the YouTube channel. I really appreciate your time. If you've found the analysis helpful, if you like to have objective levels to shoot against, where you can take really objective trades, where you can set close stops to limit your risk, I think you're going to enjoy this channel quite a bit. I encourage you to hit the subscribe button and the alarm bell. And then if you care to, we'd certainly like to have you join the team. The way you do that, there's a link in the show notes that'll take you to the registration page on my website. You can drop your email in. It takes 10 seconds. Then you'll get all my content emailed to you each and every time I send stuff out. And that way you won't miss a thing. We'd love to have you. And you'll also get an invite to the trading room. And if you're able to take advantage of that, we'd certainly love to see you. And even, if you, quote, have a regular job during the day, it's a good thing to join the trading room, because you can spin through, flip through all the commentary of the day, pick up some ideas, rather quickly. Spend 15 or 20 minutes at night when you get home, just seeing if there were any tickers of interest to you on those trades. So we'd be glad to have you. And also, as always, I really appreciate the regular subscribers for sticking with me. I hope you're doing well in your trading as we're in this little choppy period here. I hope the commentary has helped you navigate it. So I appreciate that. And for everyone, leave me a comment of what you're seeing in your own charts, commentary on how I can make the program better. And also, if you have a ticker or a sector that you'd like covered off, I will certainly get that worked into the program. I'd be happy to do that for you, so don't be bashful. Facebook was a nothing burger yesterday. We're toggling between 375 and 379. I don't think there's anything to do inside the range. If you sense that you want to get long against the bottom, that's been a good trade. You can see how many times this 375 has held. So if you get a move in the 375 that looks like it's going to hold, then you can get long there. And your first objective would be just to go to the top of the box at 379. And then if you're lucky enough or good enough and you get the breakout, then you're already on board for a potential move back up to the top at 384. So Apple, bad few days at the office. They had their worldwide developer conference with their product reveal yesterday. iPhone 13. We had drawn in this big impulsive move down with a flat bear flag, what looked like it at the time, and yesterday that broke. And so what I've done is give you a measured move target, which takes it down to 144 on the button. So at this point, the door is open for a continuation south. And so for today, if you see a move below 147.50, you can get short there, or you can short a move back into 148.50, because this will all be resistance now. You get a move back into 148.50 that stalls. You can get short there with a stop just above, and then look for a move down. And I will tell you, I was looking through my Twitter feed yesterday, and someone put a post in there that caught my attention. And I have not verified this, so the guy, it might have been a joke, but it didn't really seem like it, that Tim Cook said in the iPhone rollout that in order to unlock the phone, you need to scan your vaccine card. And I mean, that floored me. If he actually said that, I think that's a major foul. No matter what you think of vaccines, I'm reminded of Michael Jordan's famous line where during the heyday, I mean, he still probably sells the most number of basketball and tennis shoes. He always kept his politics to himself because he said Republicans buy sneakers too. And, so if Apple's taken this policy that you got to have a vaccine card or you can't use an iPhone 13, there's going to be a significant number of people that'll say, fine, I won't buy your iPhone 13 because I'm not doing that. So if someone has color on that, I'd appreciate you letting me know. I might do some digging on my own. But, I think companies get in trouble when they start, trying to set public policy with their product, because you never know which way that thing's going to turn. And then you might have a royal problem on your hands. Tesla, not much of a day, but we said be long against 740. You got a $15 move. And then you got a $15 move back to 740, so nothing's changed. If you're smart enough or good enough yesterday to get, 15 or get the full round trip for 30, that would be great trading, I would say. Yesterday, Microsoft, there was an analyst out in the early morning that got the scoop on the dividend increase, which was announced after the bell. We had a gap up in Microsoft, made a run towards 301.50, 302. If there's follow through on that, the way you can play that is, if this 299.50 holds, you can get long there and see if you get a run up to 302. And if you break out of 302, then you got 305. In the crosshairs. But if you fall, if this rolls over and now it's sell the news, or the market is just, bearish in general, you can get short at 299.50 and look for this gap to fill down here towards 297 and possibly come all the way back to 294.50. So you never want to go above a level, then lose it back on the downside. Breakouts are bullish, breakdowns are bearish. So recapturing levels or losing levels, you can always use as a toggle on your long or short ideas. Amazon, nothing burger, just sitting here at 34.40. I think that's your pivot. What gets me more bullish is a recapture of 34.71. Or what gets me bearish is dropping below 34.40. You could probably come down here to 33.70 at the bottom of this old gap that we've been working within. Google, nothing, a lot like Facebook, just trapped in this little $20 range here between 28.40 and 28.60. I think you can buy breakouts, you can sell breakdowns, but I think, as I've said many times, I think you'd find better luck trying to short a different name, no matter what this does. Now, if this thing really starts rolling over and you lose 2,800, then you've got a big void in the chart down here. So pick your spots carefully. Google has been strong, and I think you want to short weakness, not strength. So I think you'll find more fertile pastures to short probably somewhere else. Netflix. We were watching this line yesterday at 584. It lost that. So now it looks a lot like Apple with the move down, flat bear flag, a breakdown, but with a measured move target that's a lot closer to 565, 560. So here too, a void in the charts where, if the market lets go, I would expect a fast move if you lost 575 on Netflix. And by the same token, if price rallies into 585 and stalls or fails, you can get short right there with a stop just above, and then look for a continuation south. That's a very common technical move to get a breakdown, a quick back test, and then a fail. So if the market is really soggy, you might get that type of move. Semiconductors had a good day yesterday, managed to stay flat, but notice here, this 274.50 area is both above trend and above this little breakout level. So as far as I'm concerned, semis are holding the breakout. What you wouldn't want to see, of course, is a breakdown below 274 and then 272.50 and head down as I've got it drawn here. But if things firm up, semiconductors have looked pretty good. Notice that it's been rising while the Qs have been falling, right, over the last number of days. So that's got some relative outperformance. One name that caught my eye that we have been trading pretty regular here is AMD. I did see a lot of option flow into AMD yesterday as it kind of woke up. I've got two levels for you. I've got this 105.50 as a key level here, and then 107 as a resistance level, and then 109. Couple ways to play it. You could get long right here in the 105.50, 105 area. Look for a move towards 107. And then if you get the breakout, you're already on board for 109. Or take a more cautious approach, make price prove it, wait for a breakout above 107, and then look for a move to 109. And, these were the areas, 109 and 107, where there was a lot of call buying, not only into Friday, but into next week. So order flow was picking up on AMD. And if you're interested in that type of trade, I think these are the levels. Couple things caught my eye yesterday. Cyclicals reopening trades were down, but I saw some relative strength in hotels, believe it or not. Have no idea why. Hilton. There may actually be some of you that are in Hilton because it was a long trade idea back in here, and we got to move up and then some weakness, and now we've got a little breakout working here on Hilton. And if you're still in that long trade, I believe our strike was November 125. You're in the catbird seat now. What I would do is move up my stop to 127.50 or even like 128 kind of thing, and then stay long against 130. If you got any kind of pullback here, just sit tight and look for a bounce. So Hilton is coming along, and if you notice, we've got a let's just call it a $10 trading range between this 118 and 128. Just talking in round figures, $10. So now we got a breakout from 130. Your target's going to be 140 on that. So hard to kind of explain why hotels would be outperforming in a soft market, especially when the cyclicals have been having trouble. But that's what we've got. And also Marriott here was up 1.7% yesterday. That's notable. Not as strong a chart as Hilton, but still making a run here at 142.50. If you get a breakout there, you can be looking at a run up towards 151, 152.50, right in that area. So I would pay attention to hotels, and I didn't go through all the rest of the names. Just Hilton and Marriott caught my eye. So there may be some other charts in the hotel sector that are perking up. So let's wrap it up there. Let's keep in mind our situational awareness. We've got a soft market. We're just above key levels on the 50. Not a time to have your foot mashed on the gas pedal. More or less in a neutral posture, waiting to see if the 50 holds and bounces so we can get more aggressive, or if we've got to flip into reverse and get bearish on the market with the big catalysts, the OPEX and FOMC next week. So I hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.